Welcome back to Squawk Box this morning. Canadian cannabis company Aurora announcing this morning it has now appointed hedge fund billionaire. Are we going to call him a hedge fund billionaire? We can call him an activist. We can call him a lot of things. Maybe a consumer expert even.
Nelson Peltz might call him something other than that, too.
That's true, too. Nelson Peltz is a strategic advisor. Take a look at shares of Aurora Cannabis right now. They are up 11% in the pre-market just this morning. Joining us now on the Squawk Newsline is Aurora Cannabis Executive Chairman Michael Singer. Thanks for joining us. Tell us about how this all came about with Nelson Peltz.
Well, we're very excited about this announcement this morning. This is a great endorsement for our company. We got connected or introduced to Nelson several months back and had a number of, face-to-face meetings with Nelson. And he may have a reputation as a hedge fund activist, but I could tell you our diligence and the numerous face-to-face meetings convinced us that Nelson is someone who proactively works with companies to maximize value for stakeholders. He does not have an antagonistic approach and collaborates closely with, management and boards. And we're so excited to have Nelson join us.
Let me ask you this. Nelson has long talked about how some of the big CPG companies, and it could be Pepsi, you could think of P&G, you could think of all the different Coke, all these types of companies. Is this a prelude, do you think, for some of the big CPG companies to ultimately buy a company like yours?
We don't see it that way, actually. We took a very differentiated approach and wanted to proceed carefully, thoughtfully, and with a focused approach with regards to partnering. We've identified a model that potentially includes multiple partners, increasing the complexity of these discussions. So we felt it was important to leverage the expertise of a third party, Nelson in this case, who obviously comes with an incredible track record of successfully engaging with global companies.
Well, Michael, long term, when you look at the big CPG companies out there today, all of whom are struggling to find growth, all of whom want to reach a millennial audience, do you think if we're having this conversation in 3 years from now that one or more of them will have acquired or somehow jumped into the business that you are in?
I believe so, yes. I think that's a fair assumption that a number of these disruptive industries are starting to make a little noise and soon a lot more noise about partnering with companies like Aurora.
In terms of the partnerships, Michael, what's the low-hanging fruit in your view at this point? Is it going into, for instance, beauty or food via partnership in consumer products because CBD is now legal? I mean, what's the immediate growth areas for you?
We see a number of potential growth areas, certainly consumer packaged goods, as you described, the beverage industry, cosmetics, wellness. We see pharmaceuticals now starting to show interest in our space. So there are a number of what we call market segments that we anticipate to operate, or we expect to operate in with one or many of these potential partners.
Michael, when you guys sit around on a Monday morning, maybe with a whiteboard, and put a list of your competitors on that board, who do you put on that list? Because it seems like every day there is a new company that is emerging. There are some big ones, obviously, that are publicly traded, but there are a number that aren't yet, but probably will be soon.
So it's a good question. We're a Canadian company, so we do not operate as the multi-state operators do in the U.S. We're under a very different and regulated environment here in Canada. So I would argue that our competition are more Canadian-based, like Canopy and Tilray and AFRI and others. So those are our true competition.
But those are your competition today. I imagine you have to look out into the next, hopefully, 12, 18, 24, 36 months, and I imagine that competitive set's going to look very different.
So absolutely, and we have our eye on the U.S. market. That is a significant market, obviously, that we are prohibited from participating in at the moment. But we do have, we did create or spin out some of our non-core assets in a company called Australis, which is to some extent a bit of a front man for us in the U.S. who are looking at opportunities, and we have, when the environment is right, when we are permitted, we have a back-in right that allows us to take, a more meaningful position in that company to operate in the U.S. At the same time, partnering with Nelson, we believe, that will open up some U.S. opportunities for us that we, are exploring today, and we hope to be able to.
What's top on your list in the U.S., Michael? a big multi-state operator. Just earlier this week, we're reporting on Harvest's big purchase of Verano, making it one of the biggest multi-state operators in the United States.
Yes, but again, we cannot at this time operate or explore U.S. opportunities with the idea of potentially closing a transaction. We are focused, obviously in Canada. We also operate in 5 continents, in 24 countries around the world. So we are expanding our medical business across Europe, and obviously we will begin to start to pay a lot more attention, if you want, to the U.S. environment.